Thanks for joining us today. I'm Marlin Bohling with you, and I'm your tour guide to the ag commodities, which could be very curious today because we have a lot of USDA data coming out. Well, we didn't have any flash export sales this morning to talk about. That part was quiet. However, we're supposed to be getting the WASDE report, the supply and demand numbers coming out at noon Eastern time, 11 o'clock Central time. So the trade is gearing up for that. Then, of course, after the close today, USDA will release their weekly crop progress and condition report, and there will be a fair amount of interest in that as well as we start to enter over that threshold of fall harvest activity and start ramping things up here. I am joined by Mr. Chris Swift. He is with Swift Trading, and he's based right here in Nashville. He joins us in studio right now, and thank you for joining us.
Yes, sir. Good morning.
To have you on board once again.
Yes.
WASDE report coming out, September edition. Now, in this one, we're supposed to find out, what USDA thinks we may have added or subtracted for acres, right?
Right.
Up in the northern Corn Belt.
Right.
You think it's all baked in anyway?
Probably not, because we had such a big discrepancy between what private analysts forecasted and what USDA has. And we know throughout the years that big crops get bigger and small crops get smaller. And this was already a small crop to begin with from the acreage side of it. So when USDA finally came off that 178.4 down to the 175.4 where they are right now, and then we had Pro Farmer coming in at 168.1, it's a lot of still big discrepancies, and I think the average shows right now about a 172, 173 for the USDA.
All right, so let's take a look at our current prices, shall we, as far as the setup for today's report as it comes out in, well, less than 2 hours right now. So let's go to the corn board here, and right now, with our quotes provided by Bar Chart, you have the September corn. Let's go with December. I'm sorry, 5 3/4 lower. We're at 679.5, and the March contract, well, it's down a nickel. We're now at 684 1/4. Let's switch over to the soybean trade and see what they are doing. Here we're just a little bit higher. You know, we've had about a 20-cent trading range in the soybeans, and yet they're just kind of stuck in the middle. November 2.5 higher at 14.14 3/4. On the wheat market, this wheat market has really been something to observe here the last couple of weeks. And now today it's kind of taking it on the chin again. December down 13 1/4 in Chicago. We're at 8.56 1/4 per bushel. In that Kansas City market, we have the hard red winter wheat going down 7 1/4 at 9.22. That's on that same December contract. On Minneapolis December, we're down 8.5 cents at 9.19. Well, that's a lot of pressure on the wheat market there, but is it trading on something separate than what the corn and soybeans are right now? Is it in its own little universe, Chris?
I think it is. I think it's with Europe. You know, we're going into still the war there, but Russia's starting their wheat seedings. We here in the United States are probably less than 30 days away from some wheat seedings, and would really like to see that moisture come in and give us an opportunity to get that good start on that wheat this year.
Yeah, kind of sparse.
Yeah,
from what I hear,
it's not very good
in
right
the High
now.
Plains area. I don't know if they're going to get the wheat to come up right now.
Yeah, it's pretty tough right now, because then it doesn't look like we're going to get much changes in the weather anytime soon either that would really give us confidence, say, hey, now we can go out there and sow wheat and have a good stand to it.
So wheat's just kind of stuck?
I think so for right now. Lots of volatility.
And it's been stuck for 2 months.
Yeah, another 2 months.
Okay, well, we'll come back in a moment. We'll take a look at the cattle and hog market activity, and we'll talk more with this guy, Chris Swift, right after this. Now, let's take a look at what's going on in our livestock trade. We'll begin with our live cattle board. And let's take a look at these nearby contracts here. October, 22 higher, Chris. We're at 145.90. Hey, that's on the high of the day, isn't it? We have December now 50 higher at 151.47. That's just 2 ticks from its high of the day. That's quite a ways off of its earlier low by about a $0.50 or so. So a firmer note here on the live cattle board, at least to get things rolling today. Meanwhile, on the feeders, kind of similar action. We have the October contract now up 60 cents. We're at 186.17. November 52 higher at 187.25. Okay, so those two are both higher. How about lean hogs? Now they are backtracking today. We have October down $1.37, back down to 91.80, And we have December, 12 lower at $83. Why are they pressuring that nearby October so much? Any idea?
I think because the index continues to drop precipitously. It has dropped already $30 in the last 3 weeks and looks like it's probably got more to go. So I think with the October contract being the spot month and looking as if the index may drive lower, then that's probably what's keeping it soft.
Yeah, that nearby October contract has such a premium over the other months already.
Yes,
built
yes.
into it, so a little bit of evening maybe. The cash cattle market, it doesn't seem like there has been much movement lately out in the plains. How come?
141 is what they traded at last week, and I think in the beef a little bit better, but the boxes have been softening. We're now under 260 for the boxes, and I think that's probably put a little pressure on it. They've traded some, they've slaughtered a little bit heavier slaughter pace last week, and the demand has been relatively good. There's just not much to really push it one way or the other right now.
Now, what's the outlook now as we head toward the end of the year? There for a long time we were talking about expecting that big hole in the supply. Has that changed any?
Probably not going to come anytime soon. I think that we'll see placements for the month of August as equally as heavy as what they were in the July time frame. And then, for the next 2 months that we get October and November, September, October, November, they probably shouldn't be too awful shy. So going at least into February and March of next year, I don't think we'll see any kind of marketing holes until after that time frame.
Have packers been drawing on contract cattle?
That's pretty much consistently what they do, is they have most of their cattle contracted to begin with. But yes, they have been able to do that and not have to really bid very much for the open market cattle out there.
Interesting. All right. Well, thank you again
for
weighing in on
Always
the markets.
Always a pleasure, sir.
It's been an action-packed day today with all the government reports coming up. But Chris Swift is with Swift Trading. He's right here in Nashville. That's a look at our markets. Janet, I'll turn it back to you.